Okay, thank you. Good morning, everyone. Good morning, students. So I can see good morning, Sridhar, Anchal. Everyone can, I hope you can hear me clear and loud. Ashok, Bindya, Anil, Isha, Amar, Santosh, Vijay, Nisha, Sushmita, right? Okay, good morning, everyone. So before we start with, you have covered till heads of income, everyone? Everyone, you have covered till heads of income? Chapter number 1, 2, and 3, I think you have covered, right? So, are you confident about heads of income till now? Are you confident about heads of income? Anil, Sridhar, okay, good. Now, so the way we'll study in these classes is I'll share my screen and let me just share it. Uh, can you see my blank Excel file? Everyone, can you see my blank Excel? Can you see the book? Maybe can you see the book?
Yes, sir.
Okay, great. So the way we will study is, see, you have covered till chapter number 3. So chapter number 1, 2, and 3 are already done with. Now I will take this journey forward for you for chapter number 4, 5, 6, 7, and 8. So these all lectures will be taken by me. Now chapter number 4, we will discuss the clubbing. Chapter number 5, we will discuss the provision for the set off. Chapter number 6, we will discuss deductions. Chapter number 7, we will discuss advanced tax and TDS. And chapter number 8, we will discuss return filing. Okay. So, and then chapter number 9 will be left, and chapter number 9 will be for the income tax computation, right? Overall computation. So these chapters we will study in these classes. So I will be taking all these classes for you. Now, yeah, Arun Sagar, good morning. Okay. So, see, now why I'm writing all this? Because I want to relate what we are going to study. Can anyone tell me the computation format? When we do the computation of income, what do we do? When we do the computation of income, we start with income under 5 heads. Income under the head salary. Income under the head business. Business profession. Income under the head house property. And then next is, everyone please keep your mics on mute, okay? Income, and then income under the head capital gains. And income under the head other sources. So you have discussed all these 5 heads. Once we calculate under income under these heads, this is known as gross total income. Right? Now, there are 2 provisions. Now, still, you have only studied the income under the 5 heads. Now, what is additional is, there is a provision called clubbing of income. Now, this is a specific concept. This again relates to the computation of income under these heads. Okay. Now, you have done the specifics of these heads. Now, there is a provision for clubbing of income. We will discuss with the logics. Some income will be included in the income of this person. that is clubbing. Then there is set off. What is set off? So one, we will do the clubbing from here. In this, clubbing provision will be there, and there is provision for set off. Set off means if you have a loss under PGBP, if you have a loss under PGBP and you have income from salary, can you set it off? Can you set it off? These provisions are covered under chapter number 5. Yes, Arun Sagar. Arun Sagar, I think you were in the last batch as well. If I'm not wrong, I just remember your name. Yeah. So this we'll study in chapter number 5. Right? Clubbing is chapter number 4. So these two chapters we are going to study. Now, once we are done with it, then we calculate gross total income. After gross total income, we reduce deductions under chapter 6A. Then we arrive at total income. Now, these deductions will be covered in chapter number 6. Now, see, now on this total income, you calculate the tax liability. For paying this tax liability, there is a concept of you need to pay this tax liability, less taxes paid. There is a concept of advance tax here and the TDS here. So we will study this in chapter number 7. And then once our tax is final, so we need to file the return. Then we have prepared the return, then we file the return. That comes in chapter number 8. So this is the entire tax computation that you are studying. Is everyone clear till here? See, you can make some notes side by side, okay, while I'm writing it. And one more thing, see everyone, please, if you feel like anywhere the speed is not okay, I need to lower down the speed, or I need to slow down, please let me know. You can type in the chat box. I can see your chat box. If you have any queries in between, you can always type it in the chat box. I will reply to your queries. Sridhar, I'll come to it. That is the entire discussion of today's session. So you can type the queries in the chat box. I will look at the queries and answer all the queries. If you want to unmute and ask any query, I will give you surely a chance at the end. You can unmute and ask the queries at the end of the session. Okay. So this is the way we will proceed. Everyone, is that clear till here? This was the basic flow that we discussed for your chapters that you have covered already and that we are going to cover. Next, let's start with today's topic, clubbing of income. What is the default tax regime? Default tax regime is the new regime, right? Everyone knows about default tax regime. Everyone knows about default tax regime. The new tax regime is the default tax regime now. If nothing is given in the question, we always assume to be the new tax regime because that is the default tax regime now. Now, what is the section number for new tax regime? What is the section number for new tax regime? 115 BAC, correct. Now, the topic clubbing of income. Why this topic is required? Because assessees try to plan. Assessee tries to do planning to avoid taxes. So clubbing is required. So clubbing provision is required. Now let's suppose I'm having income from salary. Let's suppose I'm Mr. A. I'm having income from salary. Now Mr. A is working. He's doing a job. Now then there is Mrs. A. Let's suppose Mrs. A is not working. Let's suppose Mrs. A is not working. She doesn't have any income. She doesn't have any income in that sense. Now, Mr. A has income from salary 25 lakhs. Let's suppose this is after this is computed income. This is computed. It means after standard deduction rule. How much is the standard deduction? Everyone, how much is the standard deduction? Sridhar, is it 50K or 75K? 75K, right? When I have not given the old tax regime, you always assume to be the new tax regime, 75K. Now, income from salary is 25 lakhs. Now, this person, Mr. A, also has a rental property. Also owns a rental property. What is the tax rate? What is the marginal tax rate applicable to Mr. A? What is the highest tax rate his income is going? It is above 24 lakhs. It is 30%. It is above 24 lakhs. So the marginal means if I will get the new income, then at what rate it will be taxed? Marginal tax rate is 30%. Marginal tax rate is 30%. He owns a rental property. He also owns a rental property. If he will earn rental income, it will be taxed at 30%. Yeah, Arun Sagar, 24 deduction will be there. If he will earn rental income, it will be taxed at 30%. Now the point is, Mr. A says to tenant, instead of transferring rental income, see, I'm just typing a lot of things, so might be there can be some minor typos, just excuse me for that. Instead of transferring rental income to my account, you send it to my spouse's account. Now this rental income, instead of Mr. A, Mrs. A is receiving. Now instead of Mr. A, now Mrs. A is receiving the rental income. Let's suppose rental income is how much? Let's suppose again I'm telling you after this is computed income after 30% and all those things. Now let's suppose this income is 5 lakhs. What will be the tax liability for Mrs. A? What will be the tax liability for Mrs. A? Can you tell me the tax liability of Mrs. A? Everyone. On this 5 lakhs, the tax liability is null. You will get a rebate above 4 lakhs. It is 5%, right? But you will get a rebate. So there is a nil tax liability. Nil tax liability. So can you see, has Mr. A done a planning? Has Mr. A successfully done a planning? Mr. A has transferred income to Mrs. A and he is able to save the taxes. He is able to save the taxes. Here the income would have been taxable at 30%. Now here it is nil taxes. How much taxes saved? So taxes saved are, I'm just not doing the health and education cess calculation, okay? I'm just taking a simple figure. On this 5 lakh, I have saved 30% of taxes. Now, income tax says this income should be clubbed. Even if income is received by wife, it will be taxable in the hands of husband. Now, has income tax nullified the planning? Now, even if Mrs. A is receiving the income, it will be taxable as income of Mr. A. This is known as clubbing. Is the logic clear? Even if income is received by wife, it will be taxable in the hands of husband. Since there is only transfer of income without transfer of asset. Right? Now tell me if now, so Mr. A will pay tax on it. So Mr. A will pay tax on this income. If Mr. A is paying taxes on this income, will it be taxable to Mrs. A as well? Will it be taxable to Mrs. A as well? No, because income will be taxed once only, not twice. Then it will not be taxable to Mrs. A. Right? I hope the concept is clear, everyone. This is the concept of clubbing of income. Anyone, any doubts in the concept? So now tell me, Mr. A, let's suppose any person, normally, any person, he has influence on whom? Now think logically. Mr. A can have influence on his wife. Mr. A can have influence on his wife. Can Mr. A have influence on his children's? Right? Mr. A can also have influence on his children's. But does Mr. A have influence on the minor children or major children? He has more influence on the minor children or the major children? Minor one, minor children's. Major one can take their own decision, right? Mr. A, now see, understand this concept. In India, there is a culture that okay, parents have their parents have the control on their son's wife as well, their daughter-in-law as well, right? So there are some provisions for the son's wife as well. Normally, does Mr. A will have any control on his brother? See, the control word is wrong, but in a sense, I just want to influence is the right word, I believe. Now, to brother, they normally have very less influence. To sister also, they have very less influence, right? So the clubbing provisions apply. So here the planning is literally somewhat less possible. Here the planning is possible. Here the planning is possible. Here the planning is possible. So in these three cases, the clubbing provisions will apply. We will discuss them in detail in the entire session today. Don't worry. So these are the three persons where the clubbing provisions will apply. Next. There are two types of sections. We will study this clubbing is section number 60 to 63. And there is one more section, section 64. 60 to 64 is the clubbing provision. Now, when we see section number 60 to 63, it is applicable on the assessees. All the assessees, whether be it company, whether be it individual, all the assessees. 64 is only applicable to the individual. We will see these sections in detail. Just this analysis also we will do at the end. It is in the book as well. Okay. Let's start with section number 60. Let's start with section number 60. Let's come to the book. See, you have a summary given in the book. This summary is very, very good. This helps you to collate the concepts at one place easily, right? So as of now, see here. Section number 60, we will study. Then there is section number 61. Then there is 62, right? 63 is not specifically mentioned here. It will come. Okay. Then it is 64 1A, right? So this chart is very, very good. So once we will be done with the concepts, then you can easily refer this chart. This is a good chart. One second. Yeah. Clubbing of now, okay, I will not read it line by line, whichever are the very general topics, right? Now this we have discussed, this is the logic, and this not also we have covered. Now what you can do is, see, most of the things I will read with you in the book, in the classes, right? But if there is very simple thing which I've already explained, I will not devote time on it because we have other things to devote time on it, right? Now if you face any queries in this, you can always come up in the next session to me. Come to section number 60. Transfer of income without transfer of asset, right? So my same example, let's see this example. Mr. A confers the right to receive rent in respect of house property to his wife Mrs. A without transferring the house itself to her. The same example I gave to you. Mr. A has given the right to receive the rental income to Mrs. A, and but the house is not transferred. The rent received by Mrs. A will be clubbed in the hands of Mr. A, right? So Mr. A, he has income from there is an income from house property, and Mrs. A. Now she has received rental income in wife's account. They have received rental income in the wife's account, right? 5 lakh. Now Mr. A was under 30% bracket. Now we will apply the clubbing provisions here. We will apply clubbing provisions and it will be taxable to Mr. A. Now Mr. A here is known as transferor. He is transferring the income. He is the transferor and Mrs. A is the transferee, right? Now tell me, here in this case, have I transferred, has Mr. A transferred house property or just the income? Has Mr. A transferred house property or only the income? It is just income is transferred, just income has been transferred. Now tell me, if Mr. A transfers house property as well to Mrs. A, will clubbing apply? Do you remember of any provision applicable here? Correct. Arun Sagar says, Lakshmi. This is section number 27. Section 27, deemed owner concept. Then clubbing will not apply, deemed owner concept will apply. Section 27, deemed owner concept will apply. But this is only in case of house property. Deemed owner concept is only in case of house property, right? Yes, it is. Yes, Amar. Deemed owner concept is only in case of house property, but clubbing is not just related to the house property. It is much wider. It is much wider. You can write a note here. Deemed owner concept is in house property. Clubbing is much wider concept, covers all types of income. Right? Yeah, minor married daughter also, we will come to all those cases. I just gave an hint here. Okay. Let's move to the next. Now this was about section number 60 is clear. So if any person transfers the income from an asset without transferring the asset, the income is included in the total income of transferor. Who was the transferor? Mr. A. It is immaterial whether the transfer is revocable or irrevocable, and whether it was made before the commencement of this act or after the commencement of this act. Now, what is revocable and irrevocable, we will discuss in the next concept. Okay. Whether we can take back the income or not, it is immaterial, but this clubbing will apply. Next concept, section number 61. Section number 61. Section number 61 says, let's suppose I transfer a property to trust. I transfer a property to the trust. Let's suppose I'm Mr. A. I'm Mr. A. There is a trust. I transfer the property to the trust. Transfer a property to the trust. Now, this is the property that is being transferred. Now, Mr. A says I can interfere. Mr. A can interfere in the management of property. Mr. A can even take back the property. Now, is it a revocable transfer or irrevocable transfer? Do you understand the meaning of revocable, irrevocable? Irrevocable means you cannot take it back. If you can take back, this is a revocable transfer, which can be terminated in a sense. This is a revocable transfer because you can take back the property. You can revoke the transfer. See, ideally you have transferred your property, but you have the right to revoke. You have the right to cancel the transfer, right? So this is a revocable transfer. You have the revocable transfer, right? Now, on the other hand, if I have transferred the property, I have transferred the property. Now I do not have any rights. This will be revocable or irrevocable transfer? This will be revocable or irrevocable transfer? Everyone? This is irrevocable transfer. Right? This is irrevocable transfer. Clear? So this is the meaning of revocable and irrevocable transfer. Now, see here. See the book. All income arising, section 61, all income arising by virtue of revocable transfer is included in the total income of transferor. It means, can I write if it is option number A, revocable transfer? If it is revocable transfer, and the second is irrevocable transfer. If it is revocable transfer, then ideally clubbing provisions will apply. Income will be taxable in, even if you have transferred the property, but this is a revocable transfer. So if any income arises to the trust, this will be taxable in the hands of Mr. A. This will be taxable in the hands of Mr. A. If it is irrevocable transfer, then ideally clubbing provisions will not apply. Income will be taxable in the hands of trust. Income will be taxable in the hands of trust. Clear? Let's see it. Meaning of revocable transfer. Transfer is deemed revocable if it contains any provision for the retransfer direct of the whole or part of the income and assets to the transferor a right to reassume power directly, indirectly over the whole or part of the income of the assets. Now I am giving you one scenario you need to solve. Please read it carefully. I am giving you one scenario you need to solve. Let's suppose in this example, Mr. A has no rights to house property. It will be managed by trust and it belongs to trust. But 40% income from this property, but 40% of income, and income is, let's suppose, 10 lakhs. Income is, let's suppose, 10 lakhs. From this property will be transferred to the children, to the Mr. A's children's. To Mr. A's children. Is it a revocable transfer or irrevocable transfer? Is it a revocable transfer or irrevocable transfer? See it. Transfer is deemed revocable if it contains any provision for the retransfer directly, indirectly, or whole or part of the income. Is the 40% of income going to Mr. A back again or to the beneficiaries of Mr. A? The answer is yes. So is it revocable or irrevocable? It is revocable transfer. It is revocable transfer. Now tell me, now to Mr. A, how much will be taxable, and to trust, how much will be taxable? The total income is 10 lakhs. 40% is reverting to Mr. A's children's. One second, some issue I'm facing. Give me 1 second, guys. Okay. 1 second. Some issue in the Excel I'm facing. I'm unsharing my screen for a one. For just give me a moment to set it up. I hope it's clear till here. right? Everyone is clear? Are you enjoying the session? Yeah, Shushmita, these Excel notes will be shared. But I assume that you are also making the notes. No, actually, there is some issue in the Excel. I'm just setting it up. Give me 1 second. Yeah, I think it should be fine now. Let me share it again. I hope you can see it now, right? So revocable, it is a revocable transfer. Now, how much will be taxable to Mr. A? So clubbing provisions, if it is a revocable transfer, clubbing will apply. Can I say 4 lakhs will be taxable here and 6 lakhs will be taxable here? Everyone says no, because either entire will be taxed or not, because either clubbing provisions will apply to the entire or not. So here the entire 10 lakhs will be taxable here. To Mr. A, it will be 0. It will be 0 here, right? So clear? So this is how the provisions apply for the revocable and irrevocable transfer. So the entire 10 lakh will be taxable in the hands of Mr. A, not just 4 lakhs. Clear? Next, you transfer a property, which is irrevocable till the death of a person, and after that, or you can say after that, it will be transferred back. Now, till the death of that person, the property was irrevocable. After that, it is irrevocable. So what will be the treatment? During the lifetime of the person, it is irrevocable transfer. No clubbing will apply. After the death, it will constitute a revocable transfer. The clubbing provisions will apply. Okay. Let's see the book. Can you say a clubbing provisions will apply even if only part of income is transferred? Once the transfer is revocable, the entire income from the transferred asset is includable in the total income. There is an exception where clubbing provisions are not attracted in case of revocable transfer. Section 61 will not apply to any income arising if there is a transfer by way of trust which is not revocable during the lifetime, and any other transfer which is not revocable during the lifetime. If during the lifetime it is not revocable, then during the lifetime no clubbing will apply. In above cases, the income of the transferred asset is not includable in the total income of transferor, provided the transferor derives no direct or indirect benefit. If the transferors receive direct or indirect benefit, such income is to be clubbed in the total income, even though the transfer may not be revocable during the lifetime. See, ideally, no direct or indirect benefit you should receive. then only it is an irrevocable transfer. As and when the power to revoke arises, the income arising by virtue of such transfer will be included and the clubbing provisions will apply. This example, you can do it yourself. Very easy. Is it clear till here, everyone? Right? Next. Next is clubbing of provision arise in clubbing of income arising to spouse. Again, we will discuss the concept on the Excel. I believe the Excel should be helping you, right? We are discussing the concepts first with the logics, then we are going to the book. After the death, the property will transfer back, the clubbing will apply. Right. Next. Section 64. Let's suppose I'm in section 64 is applicable only to individuals. Why so? You will see it here. Let's suppose Arun Sagar, I've already given an example for the exception. Okay, this one. Let's suppose I'm okay. Now Mr. A says, I'm giving this property to the trust till I am alive. After that, the property will return back to my son. If I am died, then the property will revert back to my son. Right? That can be an example of the. So during the lifetime, or I can give you another example. Maybe let's do this book example. Mr. Rajesh transfers his house property to a trust for the benefit of Mr. Ramesh till his death. Right? Now, Mr. Rajesh is transferring for the benefit of Mr. Ramesh till his death. Now, the beneficiary has died. Now, it is an irrevocable transfer till the time of death. Now, hence, still income from house property would be taxable in the hands of transferee, the trust, right? However, after death of Mr. Ramesh, the income from house property will be included in the income of Mr. Rajesh. The clubbing will apply after the death. Arun Sagar, is that clear? Arun, you can type the doubt, okay? Maybe unmuting, I'll just allow at the end, okay? Because that may disturb the flow, okay? Or maybe you can park it for now, okay? I'll just let me quickly go through and then I'll surely will take all the doubts. Don't worry. You can just note down your doubt. I'm not saying no. Individuals. Let's suppose section 64 is applicable to individuals. Let's suppose Mr. A is a computer programmer. He is the owner of ABC Computer Limited. He is the owner of ABC Computer Limited. Mr. A is a computer programmer. He is the owner of ABC Computer Limited. Let's suppose he owns 80% of this company. He owns 80% of this company. Now, this ABC Computer Limited has had a lot of profits. It has a lot of profits and wants to claim expenses to reduce taxable income. Wants to claim expenses to reduce taxable income. Now, this company pays salary to Mrs. A. Company pays salary to Mrs. A as an engineer. As an engineer. Kolti, just hold on. I've started with a new concept. I'll surely come back to your query, okay? 10 lakhs. Now focus here, everyone. Mr. A is a computer programmer. He is owning a company, ABC Computer Limited. This company has a lot of profits. This company wants to claim expenses to reduce the taxable income so that it can lower down the profits. Now, salary is given to Mrs. A as an engineer. Now, let's talk about Mrs. A. Mrs. A has no income, and the wife do not have any engineering knowledge. If wife will get 10 lakhs of income, what will be the tax liability on this? If wife will get 10 lakh income, there will be zero tax liability because rebate will be available. The tax liability will be zero. Now, what is nutshell we are doing? The company is able to claim the expenses. Company has claimed expenses, has claimed salary expense, and for spouse there is a zero tax liability. Have we done a planning? The company has claimed salary expense and the spouse is having zero tax liability. This is a planning that is done. Now in this case, it says because Mr. A was owning, but is this planning possible in a simple company? The answer is no. If Mr. A is the owner, then this planning is possible. Mr. A was owning a substantial interest in the company. What is substantial interest? If you own 20% or more, Mr. A is owning 20% or more, and they have paid the same, they have paid remuneration to spouse, and spouse is not technical or professional in that area, doesn't have technical or professional knowledge. She was paid as engineer, but she is not actually working. That was just to claim the expenses. Now, will the clubbing apply here? What do you think? If clubbing will apply, everything will be sorted. If clubbing will apply, this income will be taxable in the hands of Mr. A, who is already having a lot of income, right? So in this case, clubbing will apply. It will be after applying the clubbing, it will be taxable in the hands of ABC or Mr. A. In whose hands the clubbing will apply? Due to substantial interest, it will be taxable in the hands of Mr. A because he is having substantial interest. 10 lakhs will be taxable in the hands of Mr. A, right? Clear? Next. Yes, I'm coming to it, Sushmita. Let's suppose wife is a computer engineer. She is actually working for the company and getting salary. Will clubbing apply? The answer is no. If she has the requisite knowledge, she is actually working, then there is no problem. Clear? Let's see the book. Clubbing of income arising to spouse. Income by way of remuneration from a concern in which individual has substantial interest. Remuneration in cash or kind to spouse from a concern in which an individual has the substantial interest. In computing the total income of the individual, all such income which arises directly or indirectly to the spouse of the individual by way of salary, commission, or fee in other form of remuneration, whether in cash or kind, in which the individual Mr. A has substantial interest shall be included. Now they're saying where there is a company 20% or more voting power, and in any other case 20% or more profit share. Who is a relative? That is also discussed. You or the relative have the substantial concern, substantial interest. Clear? Clubbing provisions will not variation is received on account of technical or professional qualification doesn't apply where the spouse of the said individual possesses technical or professional qualification and the income is solely attributable to application of his or her technical or professional knowledge or experience. In such an event, income arising to such a spouse is assessed in his or her hands. Clear? Both husband and spouse. Sushmita, should I go? Everyone, is my face faster? Should I go a little bit more slow? Because actually it was just reading, so I just read it. Everyone, is the speed fine or Sushmita? I'll be try to be a little bit slow, but I believe it's fine. See, just while I'm reading, because I've already explained, so while reading my speed may look okay, but I'll try to slow down. Okay, no problem. Both husband and wife have substantial interest in a concern. What is this case? Until if okay, you need to see what I'll say is what I'll suggest is I'm also typing through the keyboard, right? You should little bit increase your pace as well. Okay, you should little bit increase your pace while typing the notes, because if I'll go very slow, it will take 2 lectures to complete it, right? I also need to see the curriculum so that we are able to cover everything. But anyways, believe me, if let's suppose you are left noting down with 1 or 2 examples, no problem. What you can do is I will share this Excel file with you all guys. You can note it down later on. Okay, this Excel file will be shared. In case you have left noting down 1 or 2 lines or example, just mark it and you can note it down later on. This file will be shared. Next, if both Mr. A and Mrs. A owns 50% each in the company. It says both husband and wife have substantial interest in the concern. Where both husband and wife have substantial interest in a concern, both are in receipt of income by way of salary, etc. from the said concern. Such income is includable in the hands of spouse whose total income excluding such income is higher. Let's see an example. Let's suppose there is an entity. In this entity, Mr. A and Mrs. A. Mr. A and Mrs. A both owns 50% each. So both are having substantial interest. So they're owning 50%. They're owning 50%. It means both are having more than 20%, 20% or more. It means both have the substantial interest. Now let's suppose in this case, Mr. A is not technically qualified. He is not technically qualified, and Mrs. A is also not technically qualified. Both are not technically qualified. Now the question arises, in whose income we should club? In whose case we should club? Whether we should club in the hands of husband or we should club in the hands of wife. Let's suppose Mr. A is having 8 lakhs of salary that he has received from this entity. 8 lakh salary, and 3 lakh interest income. Mrs. A is receiving 6 lakh salary and 5 lakh interest income. Now, Sridhar, its screen is already shared. Everyone can see it. See, now here also income is 11 lakh. Here also income is 11 lakh. In whose income to club? Arun Sagar says whose income is higher. But see it here. Both are having 11 lakhs of income. Both are having equal income. We see without considering this income, correct? Yes, correct. No, no. So we will see whosoever, we will club in the hands of person, clubbing will apply. Whosoever has higher income, excluding such income. Now, Mr. A, he is having 3 lakh of interest income. Mrs. A having higher income excluding such income. Mrs. A is having 5 lakh of interest income. So she is having, Mrs. A is having 5 lakh of interest income. There's a salary income, how much? 6 lakh, right? Now Mr. A's salary will also be clubbed here. 8 lakhs. I'm not going into the standard deduction all, okay? That you will give. So 19 lakh will be there. Here for Mr. A only 3 lakh interest income will be taxable. For Mr. A 3 lakh will be taxable. For Mrs. A this much will be the taxable. Clear? You will surely get a 75,000 deduction out of it, right? For the salary head. $75K standard deduction for salary. You will get. Clear? So this is what we have done. Where any such income is once included in the total income of either spouse, income arising in the succeeding year shall not be included in the total income of other spouse. See, let's suppose next year, see once, now let me write here, once income is clubbed in hands of Mrs. A, next year as well, income will be clubbed in Mrs. A's hands only, Mrs. A in hands of Mrs. A only. Every year you do not change. Once income is clubbed in the hands of Mrs. A, next year as well income will be clubbed in the hands of Mrs. A only, even if Mr. A has higher income. Even if Mr. A has higher income. Clear? So income will be clubbed in the hands of Miss. Now, if assessing officer says opposite, unless the assessing officer is satisfied, after giving that spouse opportunity of being heard, it can necessary to do so. If assessing officer says no, you tax it in the hands of Mr. A, then it will be taxed in the hands of Mr. A. Unless AO changes that. Clear? So this is about clubbing of income in case of spouse. This example you can do, very simple example it is. I've already given you one example. It says if Mrs. A was qualified for the job, then the clubbing does not apply. Illustration number 3 also you can do. See, these examples are very, very simple. I have already seen all of these examples. You can easily do it, okay? Okay, come to here. Second number. Transfer of asset other than house property. Sorry, income arising to spouse from an asset transferred without adequate consideration. Now, let's discuss asset transferred without adequate consideration. Without adequate consideration to the spouse. Asset transferred to spouse without adequate consideration. If asset is transferred to the spouse without adequate consideration, let's make out a chart. If asset is house property, if asset is house property, or if it is other than house property. If asset is transferred without adequate consideration, which will clubbing apply to the spouse in case of house property? Will clubbing apply? Then Lakshmi says yes. The answer is no. Section 27 applies. We have just discussed in today's session. Deemed owner. This will be income from this house property is taxable in the hands of transferor spouse, deemed owner. If it is other than house property, then clubbing provisions will apply. Income will be taxable in the hands of transferor, right? In both the scenarios, here according to deemed owner the income will be clubbed, here according to the clubbing provisions the income will be clubbed, right? Let's take an example. Mr. X transferred debentures of 50K to wife without consideration. Will section 27 apply? Yes or no? No, because this is not house property. Let's suppose there are 10% debentures. Now Mrs. X will receive how much interest? 50,000 into 10%, 5K, will receive 5K interest income. Now here clubbing will apply. It will be taxable in the hands of Mrs. X. Mr. X, sorry, Mr. X. It will be taxable in the hands of Mr. X. Clear? Now the clubbing will apply here. Now tell me, let's suppose this $5,000 is further invested. This income is further invested. From this, Mrs. X, from this, 5,000, Mrs. X creates an FD. There is 8% interest that she is earning. So she has received 5,000 into 8%, $400, 400 INR. Will clubbing apply for this 400? This is income on income. This is income on income. On this, no clubbing will apply. Mrs. X will pay tax on it. Write a note here. Income earned from transferred asset is clubbed. Income earned further on investing such income. Income earned further on investing such income, or I can say income on income, is not to be clubbed. Is not to be clubbed. Write one more note here that you will understand later on. In case of minor child, even 400 would be clubbed in the hands of parents, since in case of minor, all income is clubbed except income from special talent. Just write this note. I haven't explained this note. I will explain it later on. Just mark it. Just write this note. You will understand it later on. Just write it and move forward. Okay. I hope it is clear till here. Okay. So transfer of asset other than house property, we have discussed it will be clubbed. Transfer of house property is a concept of section 27, deemed owner. This also we have discussed. Income on from the accretion of transferred asset. Income on income, that is not to be clubbed. Cannot be clubbed, right? We have seen. And we discussed transfer of asset without adequate consideration. What is adequate consideration? If you give gift out of natural love and affection, it is not adequate consideration. Clear? Is it clear till here? What time we usually take a break? Can you confirm, everyone? What time I need to give a break? Okay, let's do one 8:30, approximately 8:30. It's fine. Okay, fine. We can do this question. Okay. Transferred asset invested in the business. Let's take this example. With this example, it will be clear. Let's read it first. Where the assets transferred directly or indirectly by an individual to his spouse are invested by the transferee in the business, proportionate income arising to the transferee from such investment is to be clubbed in the total income of the transferor. If the investment is in the nature of contribution of capital, proportionate interest receivable by the transferee from the firm will be clubbed. Such apportionment has to be taken by the account value of the aforesaid investment on the first day of the previous year to the total investment in the business by way of capital, a firm as a partner, as the case may be, a transferee on that day. I believe you have it understood because I haven't explained. Let's do this illustration number 5. It will be automatically clear. One second. Okay. Illustration number 5. Mr. Webb started a proprietary concern on 1st of April 2024. Mr. Webb on 1st of April 2024, he started the business with a capital of 5 lakhs. There was a capital of 5 lakhs, right? Now, he incurred a loss during 2024-25. 2024-25 incurred loss of how much? 2 lakhs. Incurred loss of 2 lakhs. To overcome the financial position, his wife, Mrs. Vaishali, a software engineer, gave a gift of 5 lakh on 1st April 2025. 1st April 2025. Wife gave a gift of 5 lakhs. This gift is invested in business, which was immediately invested in the business. He earned profit of 4 lakhs during 25-26. Profit 4 lakh during 2025-26. Compute the income to be clubbed in the hands of Mrs. Vaishali. See here. If Mrs. Vaishali has given a loan, if wife has given a loan and husband has invested into the business, then the business profits will be allocated to the wife. Getting it? Now, on which date the gift was given? Gift was given on 1st of April 2025. Let's calculate capital balance on 1st of April 2025 for Vaibhav. He started business on 1st of April 2024. On 1st of April 2024, he started with 5 lakhs. There was a loss in 2024-25. How much? 2 lakhs. The net comes 3 lakhs. Then wife has given gift. Invested in business 5 lakhs. What is the closing capital? on 1st of April 2025, it is 8 lakhs. So can I say now there is a rule that I have to check the capital on 1st of April only? Not. I check capital balance on first day of previous year. Here gift was given earlier, but I check always on the first day of the previous year. So it is 8 lakhs here. Now tell me, can you bifurcate this 8 lakhs? 8 lakh, can I bifurcate between two types of funds? 3 lakh is my own capital. 3 lakh is my own capital, and 5 lakh is from the gift given by the wife. Now, on how much? Now, this is own capital. This is gift wife given by wife, which is invested in business. Now, we need to allocate the profits. How much was the profit in 25-26? Profit was 4 lakhs. Can you allocate in 3:5? Everyone, can you help me allocate the profit? Can I say 4 lakh into 3 divided by 5? Sorry, 3 divided by 8. 3 divided by 8. Sorry. 3 divided by 8. 3:5 is the ratio. And it will be 5 divided by 8. 2,50,000. Now, since this is from the own capital, this will not be clubbed. No clubbing apply. And here, this gift is given by wife. So this income will be clubbed in income of wife. Is that clear? So I can write income of Mr. A and income of Mrs. A. Mr. A income will be business income 1,50,000 and Mrs. A income will be business income 2,50,000. In clubbing, the source remains the same. The income head remains the same. This will be the clubbing of income, right? This is clubbing. Is that clear? Right? Let's do one. How many minutes break normally you take? I want to start a next concept. Break is of 10 minutes. Okay, 10 minutes is fine. Let's take a break now because I want to start with the next concept. It's 8:21. We will start at 8:30. Okay. So 10 minutes break I'm giving you. Okay. Team, you can start the break. Thank you. So we discussed about this concept for the allocation. Okay, just is this concept clear? Transferred asset invested in business. So Mr. Weber invested the gift in the business, so the business profits were distributed. And for this purpose, we always, for the purpose of distribution, we take the capital balance on the first day of the previous year. First day of the current year, we take it, right? So this is the example we did. Transfer of income for the benefit of spouse. If the income has been transferred, let's suppose you have given some amount to the trust, and trust is giving some income to your spouse. All income arising directly, indirectly to any person or association of person from the assets transferred directly, indirectly to such person or in association of person by an individual without adequate consideration is includable in the income of the individual to the extent such income is used by the transferee for the immediate or deferred benefit of the spouse. Let's quickly take an example. Transfer of asset for the benefit of spouse. Transfer of asset for benefit of spouse. Let's suppose Mr. A, he has transferred let's suppose he has transferred 20 lakhs to the trust, or let's suppose, taken a simple example, he has transferred a house property, he has transferred a property to the trust. Now the property, the income from the trust, income from the rental income, now this is the trust, the rental income is going to the Mr. A's spouse. This is the trust. Now rental income, whatever the trust is earning, the rental income, that rental income is going to A's spouse. So again the clubbing will apply. Rental income will be taxable to Mr. A. Mr. A hence taxable. Clear? Very simple. Let's go to the next concept. Son's wife. Next is the concept of son's wife. Now I said when father in income arising to the, now the concept is same. Calculations are same. Income arising to son's wife from the assets transferred without adequate consideration by father-in-law or mother-in-law. Father-in-law or mother-in-law. Now if father-in-law is transferring to the son's wife or mother-in-law is transferring to the son's wife, if they're transferring without adequate consideration, it is clubbing will apply. Where an asset is transferred directly or indirectly by an individual to his or her son's wife without adequate consideration, the income from such asset is to be clubbed in the total income of the transferor. Clubbing will apply. Asset invested in the business, same way we will calculate the proportionate income, and we will see the capital balance on the first day of the previous year, current year, right? Now transfer of assets for the benefit of son's wife, I have just taken an example. Here Mr. A transfers the property to the trust for the A's spouse. Rental income is going to the A's spouse. Now let's suppose instead of A's spouse it is son's wife. Mr. A transfers property to the trust and trust is giving the rental income to the son's wife. Still the income will be taxable to Mr. A. So this is transfer of assets for the benefit of son's wife. All income arising directly, indirectly to any person or association of persons from the assets transferred directly, indirectly without adequate consideration to such person or association of person by an individual will be included in the total income of the individual to the extent Such income is used by the transferee for the immediate or deferred benefit of the son's wife. Have you studied 56 to 10? Other sources? If anyone receives any asset without consideration, 56 to 10 is attracted. Those provisions will remain intact. Those will apply. Do you know about 56 to 10? Have you studied those limits of gift 50,000, gift above 50,000, then property, right? All those provisions of 56 to 10. If you receive anything without consideration, then it is 56 to 10 provisions will apply. This example you can do, okay? See, I am taking the examples here, right? Most of the examples I'm taking here, but these are very simple examples. And believe me, I have, before coming to the class, I have verified all these examples. So these are very simple. You can also do it. Harshal, if the amount is above 50,000, the entire amount is taxable, right? Clubbing of minors income. Minor income. Now, let's discuss the concept minor income. Minor. Let's suppose parents have lot of income. What the parents do? Let's suppose now both the parents have lot of incomes. Both the parents are earning good. They are into the 30% bracket. They have a minor child. They say they tries to shift income to the minor child. Let's suppose they create FDs in the name of child. They give gift to the child and they create FDs in the name of the child. They shift income to the child. Now, if they shift income to the child, this clubbing will apply. They create FDs in the name of child. Whatever is the income received from FD, that will be taxable in the hands of parents. Clubbing of income will apply. Right? Now, the important point is which all incomes are included in the clubbing. Now, write a note. All income once again. All income of minor child is clubbed. All income of minor child is clubbed except income from, we have written a note here, except income from special talent. Let's suppose minor child is involved in making reels for advertisement. Now many children are making reels nowadays. They are getting money for performing in those reels. This income is out of talent of minor child. This will not attract clubbing. This will not attract clubbing. Because this is the income from the special talent the child has. Let's suppose child's income are, let's suppose he has two types of income. He has income for reels work. He is making reels getting, let's suppose his income is 5 lakhs. He is having interest income 3 lakhs. Total income of the child is 8 lakhs. Tell me how much will be clubbed in the hands of parents? How much will be taxable to child and how much will be taxable to parents? Taxable to child and clubbed for parents. Clubbed for parents. Now for the reals work, it will be taxable to the child 5 lakhs and the interest income will be clubbed. Interest income 3 lakh will be clubbed. Clear? In whose income it will be clubbed? In whose parent it will be clubbed? I said clubbed for parents, but parents in whose income it will be clubbed? Income. Right? Some notes here. Income will be clubbed in the hands of parent whose income is higher. Next, once income is clubbed in the hands of one parent, let's suppose first year husband is having higher income. Second, you clubbed in the hands of clubbed in the hands of father. Next year, next year, next year, it wife is having the mother is having more income. Let's suppose next year mother is having more income. Now, will it be clubbed in the hands of father or mother? Will it be clubbed in the hands of father or mother? It will continue to be clubbed in the hands of father. Give me 1 second, guys. It will be clubbed in the hands of same parent every year. If A wants, he can review and change it. Let's suppose both husband and wife they got divorced in cases of divorce. Now wife is maintaining the child. Let's suppose wife is maintaining the child, then income of minor will be clubbed in the hands of person who is maintaining the child. Clear? I hope it's clear till here. Next, make one chart here now. See, I'm making these notes so that it is easy to remember, but doesn't mean I'm writing each and everything. I'm just writing the important points. But you always refer the book for the entire thing. We are also reading the book, right? We can only write the major points, the important ones, the complex ones, right? So that it is easy to understand. Matthew, let's suppose father was having more income. It was clubbed in the hands of father. Now you are asking if AO wants, he can review it, change it. Father was having more income in the first year. It was clubbed in the hands of father. Subsequently, also it is clubbed in the hands of father. But now father has stopped earning. Only mother is earning. Then AO can say, okay, now mother is only earning, it will be clubbed in the hands of mother. The AO can change it. AO can review the case and change it. Minor married daughter and minor child other than minor married daughter. Minor married daughter, it is a case of house property or other asset. Now, again, same here. You have studied section 27. Now you need to apply it. It is a case of house property and other asset. If it is case of normal minor child other than minor married daughter, if this is a case of house property, will clubbing apply? Or if you have shifted the income to the minor, if you have shifted the income to the minor, you have transferred the asset without adequate consideration, parent will be considered the deemed owner. In this case, the deemed owner concept applies, section 27. In case of other assets, the clubbing will apply. Clubbing provisions will apply. Right? This is what you have already studied in income from house property. Next. In case of minor married daughter, does section 27 applies? If there is income from house property, section 27 will not apply. The clubbing provisions will apply. Clubbing will apply. And in case of other asset, always clubbing will apply. So if it is a minor child other than minor married daughter, the concept of deemed owner applies, except otherwise the clubbing provisions apply in case of minor child. I hope this chart is clear. Let's study it from the book. Clubbing of minor child's income. All income of minor child is clubbed in the hands of his or her parent. However, the income from the activity derived from manual work or from the activity involving skill, talent, or specialized knowledge or experience will not be clubbed. The income of the minor will be clubbed in the hands of income of the parent whose total income excluding the minor income is greater. Once clubbing is done, it will continue to be clubbed in the hands of same parent in the subsequent years. The assessing officer may, however, club the minor's income with that of other parent if it is after giving other parent an opportunity of being heard, it is satisfied, it is necessary to do so. When where the marriage of parents doesn't subsist, the income of the minor is includable in the income who maintains the child. There is one very important exception here. Please highlight this point number 6. Please highlight point number 6. However, income of minor child suffering from disability of the nature specified in ATU, we will discuss this ATU sections in the next to next chapter. If minor child is suffering from disability, the clubbing provisions do not apply, shall not be clubbed. If minor child is suffering from disability, there is a section called ATU. We will study in deductions chapter. You will get some benefits if you are having some disability. If minor child is suffering from disability, then the in-clubbing provisions will not apply. It is an exception, important exception. The question will give you just one line: the minor child is disabled as per ATU, and the clubbing provisions will not apply. You need to take care of this exception. It may be noted that the clubbing provisions are protected even in respect of minor married daughter. Leave this note for now. I will explain it. In case of asset transferred to a minor child not being a minor daughter, without consideration is house property, then by virtue of section 2171, the deemed donor concept will apply. Therefore, the income from house property will be taxable in the hands of transferor parent and not in the hands of minor child. Consequently, clubbing provisions would not be attracted. If it is deemed donor, the clubbing provisions are not attracted. Due to which the benefit of section 1032 not available. We will come to it. Just give me 1 second. However, if the house property is transferred by the parent to his or her minor married daughter without consideration or for inadequate consideration, section 27(1) is not attracted. In case of minor married daughter, 27(1) is not attracted. In such a case, income from house property will be clubbed under section 64(1)(a) in the income of the parent whose total income is higher, and the benefit of section 1032 is available. Now, what does it say? There is an exemption that we need to study. This is called section 1032 exemption. When income from minor is clubbed, parents are entitled to an exemption of $1,500, 1,500 INR in respect of each minor child. If income of minor is less than 1,500, then entire income is exempt. This exemption is available only in old regime. It means if you are opting, if you are opting out of 115 BAC, then only it is available. 1,500 is for the year per annum. I'm giving examples, note down. Let's suppose father, he is having 3 minor children. First minor children has income of $2,000. Second minor children has $2,000 income. Third minor children has $1,100 of income. Will you do like this? You will total up the incomes. And there are 3 children, so you will do 1,500 into 3, 45. You will reduce it. Will you do like this? The answer is no. You will not do like this. You will see it for the exemption. You will see $2,000, 2,000 rupees or 1,500, whichever is lower. The exemption would be 1,500. Second minor child, 2,000 or 1,500, whichever is lower, 1,500. Third, 1,100 or 1,500, whichever is lower, you will take 1,100. So the total exemption would be 4,100. This you get only in the old regime, not in the new regime. Clear? Let's come to the book. Okay, so it was saying here, one more thing. It was saying here, if there is section 27 here applied, then section 1032 exemption not available here. 1032 exemption, because clubbing not applied, not available in this case. And since it is a house property, clubbing is applying, section 1032 exemption is available here, because it will be available only if the clubbing is there, otherwise not. I hope it's clear. Let's do an illustration. Question number 7 you can do yourself. Question number 7 you can do. Very easy it is. Let's practice question number 8. Illustration 8. Compute the gross total income of Mr. A and Mrs. A from the following information, assuming both exercise the option of shifting out of the default regime. It means they're following old regime or new regime? Old regime or new regime? They are following the old regime. They are following the old regime. In the old regime, 1032 is available. Make sure you do it. Salary income. Can you just copy paste the screenshot? A detailed computation on various heads of income is not required. Okay, let's do it. Salary income of Mrs. A. Now there is Mr. A and Mrs. A. We need to calculate the total income, gross total income. Mr. A and Mrs. A. Salary income of Mrs. A, 2,30,000. Salary income of Mr. A, 3,90,000. Now tell me, now they're giving income of minor son, income of minor daughter, income received by bank deposit of C, and then C. They're talking about other only. They are talking about their children's now. In these four, they're talking about the children's. Now, whose income is higher? A's income is higher or B's income is higher? Sense. Whose income is higher? Mr. A's income is higher. So clubbing will be in the hands of Mr. A. So clubbing will be in the hands of Mr. A. Right? You can see my screen, right? Is there something an issue? My screen is clearly visible, right? Okay. So Mr. A, the clubbing will be in the hands of Mr. A. Now tell me, Mr. A has income of 390 plus minor's income. Now the rule for minor is income of minor son B from company deposit. Son B, there is a son, Mr. B. There is income from company deposit. How much? 15,000. I'm leaving some space. Income of minor daughter C from special talent. It's special talent income clubbed. It's special talent income clubbed. Daughter C. Special talent income is not clubbed. It will be taxable in the hands of C itself. Income from bank interest received by C on deposit made out of her special talent. See, it is income on income. Is income on income clubbed? Is income on income clubbed? Write a note here. Write a separate note here. Income on income is not clubbed normally. In case of minor child, every income is clubbed. Except income from special talent. Next. Now this income was from special talent, which was not clubbed. Which was not clubbed. Now what they did, they deposited this in the bank. They deposited this income in the bank. Now source was special talent. Now bank is paying interest. Will this income be clubbed? Yes, this income will be clubbed. Irrespective whatever was source of funds. This is income or income. Special talent not clubbed, but this income will be clubbed. So the interest income of C, daughter C, interest income will be clubbed. How much? $3,000. Gift received by C from friend of Mrs. A. Now C is receiving a gift of 2,500. Is that taxable? Gift from non-relative up to 50K. 56 to 10. It is non-taxable. It is $2,500 only. Now, can we give section 1032 here? Section 1032 exemption here. How much will be there? 1,500 entire will be allowed here. Entire 1,500 will be allowed here. Now here again section 1032 exemption will be allowed. 1,500. Entire 1,500 will be allowed here. Now what will be the income of Mr. A? Can you tell me? So for Mr. A, 390 plus 13,500 plus 1,500. This will be the income. This will be the total income from Mr. A. GTI, gross GTI of Mr. A. Is that clear, everyone? I hope it's clear. This example is clear. If this would have been the new scheme, then 1032 is not available. Rest everything is same. Everyone, are you with me? Yes or no? I'm receiving less responses now. Avijit, Bindya, Dhanlakshmi, Harshal, Isha. Okay. So this was example number 8, illustration number 8. Next concept, cross transfer. Gross transfer. Yeah, if 115 BAC, then 1032 exemption will not be available. You just add 1300 to, sorry, $3,000 to it. It will be the answer. Cross transfer. Tell me, see, people always try to do planning. People always try to do planning. Now, what, see, let's suppose Mr. A is transferring any property to Mrs. A and the income is there. Will clubbing apply? If Mr. A transfers anything to Mrs. A, will clubbing provisions apply? Okay, wait. Okay, it is income from profession. You are saying Mr. A's income is, yeah, fair enough. You can just write it profession here. Maybe I had just mistakenly read it. Thank you, Harshal. Okay, I'm moving forward now. Mr. A, if Mr. A will transfer income to Mrs. A or any property, something, if Mr. A will transfer to Mrs. A, the clubbing will apply. Clubbing applies. Next, if Mr. B will transfer to Mrs. B, the clubbing will apply. Now they both are trying to make something. They both are trying to do plannings, but they are not able to do it. They both are trying to do planning, but they are not able to do it. Now, what they think of, we will do a planning. Now, Mr. A has to give something to Mrs. A, and Mr. B has to give something to Mrs. B. Mr. B has to give something to Mrs. B. Mr. B has to give to Mrs. B. Now, what they plan, they think, okay, the law restricts A to B transfer, Mr. Mrs. A. Mr. A transferred to Mrs. B and Mr. B transferred to Mrs. A. Will the clubbing apply? Ideally, as per the provisions we have studied till now, will clubbing apply? Now, this is called a cross transfer. You are doing this transfer to avoid the taxes. This is cross transfer. Law says because this is cross transfer, clubbing would apply here, would be applicable here. Clubbing would be applicable here. Because people can try to do all these things. That's why the law says clubbing would be applicable here. There is no relation, but even if there is no relation, people are trying to do the planning. See why it is this thing? Is it always like this? We will see an example as well. Sridhar. People are trying to do planning. Law is trying to avoid so that people cannot plan and they pay the legitimate taxes. See, cross transfers are somewhat difficult to find out. I will say cross transfers are somewhat difficult to find out for the assessing officer as well. But if find out, but if they find out that there is a cross transfer, the taxes can be levied. The clubbing will apply. Before reading all of this, let's come to this example. Mr. Vasudevan gift a sum of 6 lakhs to his brother's wife. Mr. Vasudevan. This is illustration number 9. Mr. Vasudevan is giving to his brother's wife gift of 6 lakhs. If he will give to his wife, the clubbing will apply. Now they will do, he gives to his brother's wife 6 lakhs. On 14th of June, on 12th of July, his brother gifted a sum of 5 lakh to Mr. Vasudevan's wife. Brother is gifting. Now his brother is gifting to Mrs. Vasudevan 5 lakhs. This is 5 lakhs. Tell me how much is the cross transfer? Is 5 lakh is common deposit in bank and by Mrs. Vasudevan and wife of Mr. Vasudevan's brother on this, a 9% interest is there. These amounts are invested in bank at 9%. These are invested in bank at 9%. Invested in bank at 9%. Clear? Now, ideally, both have saved the taxes. If this will not be treated as cross transfer, both have saved the taxes on the 9%. Let's suppose wives have no income. Wives have no income. Then both have saved the taxes. So they say it is not allowed. They say it is not allowed. We will treat it as a cross transfer. We will treat it as a cross transfer. Now, even in this cross transfer, Mrs. Vasudevan income will be clubbed in hands of Mr. Vasudevan. You cannot escape like this. And brother's wife income will be clubbed in hands of brother. Now Mrs. Vasudevan has invested 5 lakhs. Now this income will be 5 lakh into 9% and into whatever number of months it is. 5 lakh at the rate of 9% into number of months. Now here also the cross transfer will not be 6 lakhs. It will be just 5 lakhs. The clubbing will apply only 5 lakhs, not on 6 lakhs. Clubbing applies on 5 lakhs, not on 6 lakhs. Clear? Clubbing applies on 5 lakhs, not on 6 lakhs. You can study this in the given. Okay, you can study all of this. You can say, however, the interest income earned by the spouse on the fixed deposit would also, it is included in the hands of Mr. Vasudevan's brother, not the interest income entire on the fixed deposit, because the cross transfer is of 5 lakhs only. 1 lakh income will be taxable in the hands of brother's wife only. Mr. Amar, the 5 lakh will be taxable in the hand, income on 5 lakh will be taxable in the hands of brother, and 1 lakh income will be taxable in the hands of brother's wife only. Clear? Now this is the theory for this. You can study this paragraph. Come to the second paragraph. The Supreme Court, in the case of, remember this case law. This is important in case of cross transfer. Please remember this case law. Now, what is this 1967-66 ITR 142? Can you tell me what is the 66 ITR 142? Let's write it. 66 ITR 142. Let's see what comes. Hmm, it is not directly coming. Ideally, it should come. '66 ITR income tax case. Let me write it. Income tax case 66 ITR 142. Can you see it here? Commissioner of Income Tax Bombay versus Keshavji. This is the case coming here. Commissioner of Income Tax CIT Bombay versus Keshavji Morarji, right? Now, this is the case from the Supreme Court of India. Now, these are the case, what do we call it? These are the citations that we call. These are the case citations, right? Now, based on this, we identify a case law. These are the citations 66 ITR 142. Supreme Court in the case of CIT versus Keshavji Morarji observed if two transactions are interconnected and the parts of the same transaction in such a way, it can be said that the circuitous method was adopted as a device to evade tax. The implication of clubbing provisions will be abstracted. That's why on the cross transfers, the clubbing provisions apply. Can you see there is no section number here specifically? It is the Supreme Court judgment coming here. Accordingly, income arising to Mrs. B on the house property should be taxable in the hands of B, and dividend from shares this is related to the previous example given. Now this we have done. Is the cross transfers clear? Are we clear till here, everyone? Sushmita, why go only Google page? I've already shown. Everyone is able to see my screen whenever I'm switching, right? I can unshare and share it again, Sushmita. But everyone else is able to see. I've shared the entire screen, not the window. Right? Okay. The we are left with only very small topics. Let's cover it up. Cross transfers we are done. Next topic is HUF. Hindu undivided family. What are the tax rates applicable to the HUF? What are the tax rates applicable to the HUF? Slab rates. Now see if there is a standard rate, the planning is somewhat less possible. Like in partnerships, 30% directly. So these rates are same as individuals. Now people can take benefit of the slabs, lower percentages. But is rebate available in HUF? Is 87A rebate available in HUF? Is 87A rebate available in HUF? Yes or no? It is only for the individuals. 87A not available. But still the slab rate benefit is there. Let's see section 87A. 87A rebate. Can you see the starting language of it? An assessee being an individual resident is HUF covered? The answer is no. '87A not available. Now, if Mr. A gives property to the HUF, if Mr. A gives house property to the HUF, Arun, the HUF will not be senior or super senior, right? Now, individual gives house property to the HUF. Otherwise, then, for adequate consideration. Advance it is for inadequate consideration. Now, HUF will have income from house property. HUF will have income from house property. Now, here also the clubbing will be directed. Clubbing in will apply in the hands of Mr. A. Clear? Where an individual who is a member of HUF converts at any time after 1969 his individual property into property of HUF. He is a member or throws such property into the common stock of family or otherwise transfers such individual property to the family otherwise than for adequate consideration. The income from such properties will continue to be included in the total income of the individual. The clubbing will apply. Next case is of partition of HUF. Let's suppose the partition of HUF happens. Partition of HUF happens. If the partition of HUF happens, there will be income from house property 4 lakhs. Income from house property 4 lakhs. Now let's suppose the this was a house property that the partition has happened. Now it is given to 4 people. Mr. A, Mrs. A, then Mr. B and Mrs. B. Now let's suppose income from house property was 4 lakhs. Now everyone will receive 1 lakh, 1 lakh, 1 lakh. Now in this case, how much income will be taxable to Mr. A? Earlier entire income was clubbed. Can you see? Earlier entire income was clubbed in Mr. A. Now if the partition of the property has happened, now will Mr. B's income will also be clubbed to Mr. A? No, because Mr. B is the brother. For the brother, no clubbing is there. Now, if partition happens and this property is divided, this income, these two incomes will be clubbed in the hands of Mr. A. 2 lakhs will be clubbed in the hands of Mr. A. These will not be clubbed because on the brother or the brother's wife, no control is assumed, no influence is assumed. The clubbing provisions are not reflected here. Clear? I hope it's clear. HUF case. One second. Where the converted property, yeah, Mrs. B's income will be clubbed in the hands of Mr. Right. Where the converted property has been partitioned either by way of total or partial partition, the income derived from such converted property is received by the spouse, or the partition will be deemed to arise to the spouse from the assets transferred directly by the individual to the spouse, and consequently such income will also be clubbed in the total income of the individual who effected the conversion of the property. No, see, here in this case, this is an extension, sorry, Dhanlakshmi, it is an extension of this example. A had given the property. Now this property is having, let's suppose Mr. A had originally contributed the property. For A, the this is happening. For Mr. B, the clubbing will not happen because here, ideally, before partition, Mr. A was getting taxable on the entire income. Let's suppose house property income was 4 lakhs. Entire clubbing will apply for Mr. A, 4 lakh will be taxable. Now, after the partition, only 2 lakh is taxable because 2 lakh is going to the brother and brother's wife. For Mr. B, the clubbing will not apply because Mr. A gave the property to the HUF, not Mr. B. Got it? So here the clubbing will not apply. Can you see it? Such income shall be included in the total income of the person who effected the conversion of the property. Where income from converted property is included in the total income of the individual, it will be excluded from the individual or family. If Mrs. A income is included in Mr. A, Mrs. A will not pay tax on it. That we already know. Clear? Income includes loss. We already know that. If there is an income on that clubbing provisions apply, for the loss also the clubbing provisions will apply. Same provision. Distinction between section 61 and 64 that I've already told. 61 applies for all the persons by any person, and 64 is about the spouse and the minor persons. Now spouse will be only of the individuals, not of the companies. Minor children will also be of the individuals only. So section 64 is applicable only to the individuals. Clear? Now clubbing provisions are attracted in respect of income arising from the assets transferred. However, income from accretion, income on income, is clubbing applicable on income normally? The answer is no. But in case of minor child, it is applicable. Income arising from accretion of income arising from transferred asset would not be clubbed, except in case of minor child. So income on income is clubbed. We can just write simply. I think we have already written, but we can just write it again. Income on income is not generally clubbed, but it is clubbed in case of minor child. But it is clubbed in case of minor child. Clear? This example you can do. So this was your entire chapter, clubbing of income. Okay, I'm giving you one question quickly. Everyone, please solve it. I'm giving you one question. Let's suppose there is minor married daughter. Rent received $1,600. Now, parents are following old regime. Can you tell me how much income will be clubbed? How much income will be clubbed in hands of parent? Please think logically. Please think logically. Mathily, where is 1500 deduction? Section 1032 exemption. Sorry, exemption. They are following the old regime. Income from it is minor married daughter. Minor married daughter. The clubbing applies. Section 27 do not apply. See here. It is minor married daughter. In that case, clubbing applies. Section 27 do not apply. I've written it clearly. Yeah, clubbing in the hands of parent, I'm asking. See, you are saying full 1600. Those who are saying full 1600 will be clubbed. Where is section 1032 exemption? Arun Sagar is correct. See, you are following old. Now the parents. Now we are making the parents computation. First of all, you will calculate income from house property. How much is the rent? Rent is 1600. Won't you give 24 a deduction? Won't you give 24 a deduction of 30% first? Firstly, you will calculate income. It will come. Income from house property will come this much. Income from house property will come this much. 1120. Then you will give section 1032. How much section 1032 will be given? 1500 or 1120, whichever is lower. 1120 is lower. What is the net income to be clubbed? 0. Everyone, is that clear? Okay, have you gone to the income tax website ever in the classes? Have you seen where to refer the Pay Act? Let's suppose if you want to study these provisions from the act, do you know how to study the income tax? Sorry, in case it is not house property, then it will be 100. Yeah, if it is interest income, that will be 100, right, Dhanlakshmi, right? Everyone, I'll show you. See, go to income tax site. You go to first site here. You know the income tax has changed. Everyone, do you know the income tax has changed from this year? Right? But you don't have to worry about those changes. Those will be applicable from the next year when you will be in your CA finals, right? Sorry, this is the e-filing portal. Yeah, this website, incometaxindia.gov.in. You go to tax laws here, you go to acts here. I'm going to Income Tax Act 1961. Now they've given the option of download PDF as well. You can refer one section here. Let's go to section number 64. Right? Can you see all these we have studied? Let's quickly see it. Income of individual, in spouse or minor child. To the spouse, remuneration. Have we discussed the concept of remuneration and substantial interest? Right? Then we have discussed the section 27, deemed donor concept, otherwise done for adequate consideration. Then we have discussed the concept of son's wife. Can you see? In book it is given in simplified format. Then we have discussed you transfer to anyone otherwise than for adequate consideration for the benefit of our spouse. Then for the benefit of son's wife, these all provisions we have discussed. Then they have given in whose income it will be clubbed in the hands of us who is earning higher income, whose income is greater, right? Then what is substantial interest? Substantial interest is not less than 20%, it means 20% or more, right? Then relatives are seen. Then they are talking about asset transfer directly and indirectly to son's wife or son's wife, right? Spouse or son's wife. Then if it is invested into the business, you see the nature of contribution as a partner. You see the first day of the previous year. And we have seen one exception. If the child is under disability, no clubbing applies. But if the child is doing work from manual or skill talent, then again no clubbing applies. Where the marriage of the parents do not subsist, then whose income is higher? We see, sorry, marriage subsists, whose income is higher. If the marriage doesn't subsist, we see who is maintaining the child, right? Then we discuss the concept of the individual being an HUF, where the income is deemed to be derived from the converted property. HUF property we have seen. Now what is a property? Movable, immovable. Income includes loss. Have we covered the entire section? Everyone, have we done all of these points? So this is how you study the Income Tax Act. I hope. Okay, this was it. We are done with the entire chapter. Now your homework is, now this is a very good summary given here. You can read this summary along with section numbers. Then you have these test your knowledge questions. Please practice all these questions. If you will have query in any of these questions, I will take it up in the next session. Next class is on, I think, next class is on Saturday. Okay, one more thing. Yeah, I'm coming to Dhanlakshmi, I'm coming to the queries. One more thing, the Saturday's class is at 11 a.m., right? It is not at 7 a.m., it is at 11 a.m. Saturdays and Sundays class will be on 11 a.m., 11 a.m. to 1:30 p.m., right? So please do practice all of these questions. Okay. I hope you have enjoyed the today's session. I hope you have understood. Now, if you have any queries, you can ask. In case of wife giving gift and invested in husband's business, earns profit in shared proportions, how many years we need to? Till the time the money remains invested, Dhanlakshmi. Till the time the money remains invested, it will be included in the proportionate income will be included. We see the share of capital, right? Right. I hope the concepts were clear. I hope you would have enjoyed today's session. If you have any queries, you can ask. Any queries? I am waiting. You can type in. Or if anyone wants to unmute, you can also. Arun Sagar, you want to unmute?
Yes, sir.
Yeah.
Sir, actually, I have a doubt in a gift case. Sir, if the minor, assume that a minor child is receives a gift worth of rupees, non-relative means father,
Sorry,
friend, 40 rupees.
come again, Arun Sagar.
Sir, in case the minor daughter, okay, she received worth of 40,000 rupees worth of gift from the father friend. Okay, and father also in that year they received 40,000 worth of this from from other friend. In this case, 50,000 I need to be club with I need to club and compare with 50,000. Otherwise, individual I need to be check.
You are talking about cross transfers, right?
No, gift case. Sir, assume that
Okay. You are
okay,
asking the
daughter,
query
but
from the income from other sources. Got it.
yes, gift case.
See, 50,000 is not from one single person. 50,000 is the entire limit, right? If you receive gift from the if you receive gift from relatives, they are exempt. It is not income from other sources as the 56 to 10 exception. Now, if you receive gift entire year from anyone, let's suppose you receive gift from one person 20,000, another person 40,000, then it is a total 60,000. Then it is exceeding 50,000. The amount exceeding 50,000 will be taxable.
Sir, it's taxable. I know that, but I need to be had my son gift also in that limit compared to cross 50,000 or not. Sir, I'm
No, no.
actually
If the
asking.
limit,
Daughter is received.
if the son's gift is there, then that gift is from relative. That is not to be counted in that limit.
The
That is not.
non-relatives. Sir, actually, my question, assume that my son birthday. One of my friend gifted worth of rupees 40,000 rupees gold chain something to my gift, my daughter. Okay,
Okay.
I also received 30,000 rupees worth of gift from some other friend. I'm asking both gift I need to be added and I need to be checked with 50,000. Otherwise, 40,000 what I received I need to compare with my 50,000 with
Okay.
my daughter
I got
and
it.
30,000 with myself.
Let me clarify your question. You are saying father is receiving gift. Father received gift 40,000. Let's suppose. Now son received gift 30,000. Right. Now, do I
Yes,
need
sir.
to apply the combined? Do I need to apply the 50K as combined or 50K separately? Right. That is what you are asking.
Yes.
I believe 50K will be applied separately, but I will just cross check on it.
Okay.
I will answer you in the next session. Okay.
Sir,
I'll just,
actually, I have one more doubt.
yeah, tell me.
Sir, in case if the cross transaction is done, means assume that in different financial, in that case also it applied. Otherwise, I need to be ignored.
Sorry, come again.
Sir, cross transaction. it's happened in different financial year. In that case,
See, ideally, see, let me tell you a very practical thing. Cross transfers are difficult to identify. If they are identified, then yes, even if it is a different financial year, then also it will be taken into consideration for the clubbing. Because cross transfer is something they haven't specifically defined, Arun Sagar. See, it is upon the assessing officer, they will check if it is a cross transfer, they will see the substance over the form, right? Then
yes.
surely if it is after 2 3 years, maybe no one will catch it and it may not qualify as cross transfer. But yeah, surely let's suppose you do one transaction on March 31st and the next transaction on April 10th. Maybe there is a gap of only 10 days. That can, even if different financial year, that can be a cross transfer and the clubbing may apply.
Okay, sir. Okay, cross transaction between the okay same financial year, but investment. Okay, the receiver is didn't made any investment that time. It's not going to affect, right?
See, if the receiver has not made any investment, receiver has not made any income, then nothing. See, it is the income to be clubbed, not the asset. Income is clubbed, not the asset. So if the receiver
Sir,
has not
but
made any income, there is nothing to be clubbed.
one of the case study I saw that okay, if they receive this year and he invested this year, then only it's going to be attract. But if they is receive this financial year, but after 2 to 3 years after that they invested, then the clubbing is not applied. They told that.
There is no
So that
hard
reason
fast
only.
rule, Sagar, because it is upon the assessing officer to check. But yeah, ideally, if that will qualify as a cross transfer, if you are qualifying as cross transfer, the clubbing will apply.
Okay, sir. There
There
is
is
a
no
one
specific
of
year
the
mentioned. There is no specific year mentioned that okay, that it is to be in the current year, it is to be in the next year, because this concept is from the court judgments and all, right? You will appreciate this concept. This concept is from the court judgments. Now, Keshavji's judgment, right? Now, the court, they do not say you receive income in this year, you will start receiving in 2 years. Maybe after 2 years, the people are the transactions get lost. Normally, the trail get lost, and people do not treat it as clubbing. But I see, if you have done, Arun Sagar, if you have done, let me ask you clearly, if you have done a planning, will you declare it yourself in the return? The answer is no. It is only when the
no.
assessing officer will catch it, they will treat it as cross transfer or not. Getting it?
Yes, sir.
You will,
Yes, sir.
if you are doing the planning, why you will yourself declare it in the return?
No, sir. I actually asked. Okay, that time also clubbing was attracted or not.
Yeah, ideally, if it is treated as cross transfer, clubbing will be attracted. If now you ask me if income started after 1 year, 2 years, I do not have a specific answer. It is upon the assessing officer to assess that case. Maybe one assessing officer assess in a similar way, other assessing officer may assess in a different way.
Okay. Sir, I have one more query. Sir, okay, the 64 under the section 64, if the husband, otherwise one of the spouse have a significant influence, otherwise holding rights in the any company, that case, who okay, because of the spouse is getting the any salary or something, even they are not doesn't have any qualification. In that case, the clubbing going to apply in the hand of the who holding the rights, right?
No, clubbing will apply in case of who's, yeah. See, whosoever is having the substantial interest is fine, but if both are having the substantial, normally if one person is having the substantial interest in that person, hence the clubbing will apply. If both are having the substantial interest, then we will see the higher income.
Sir, but in the definition, they mentioned that in case even their relative also holding that substantial interest, that also they going to club. In this case, a wife also having that right because the husband is a relative person, right?
If, see, yes, normally you, let's suppose husband and wife, if both, see, normally it is the person who is not technically qualified, whose income is qualified, is clubbed in the hands of other person, right? If you are, I think you are telling me a scenario where, let's suppose, husband is owning 15%, wife is owning 10%, right? You're telling me a
No,
scenario
sir.
like this?
No, sir. Actually, sir, I'm telling that assume that the husband holding 30%, wife doesn't holding even single percent. But as per definition, they told even you not holding any single percent, if the relative is holding some percent, that time also you're going to treat it as a substantial person. But in this case, husband is holding 30%, husband wife there is a relation with relative person.
No, you do
I'm
not
telling
count it
both
like
person
that.
having.
See, wait. Firstly, in this case, the wife's income will be counted in the hands of husband. But if both holding substantial interest means both are separately owning it, right? Now, those relatives provision, why it is there, you need to understand the interpretation, right? Interpretation as, let's suppose husband is owning 15%, The brother is owning 10%. Now the husband will be counted as owning 25%. Relatives. That's why the relative definition is important. You cannot split the ownership interest just to avoid those provisions. That is the reason behind it. Now, in cases where both have the substantial ownership interest, we see the higher income. In that case, both wife and husband are owning separately. Like in my case, 50-50% they were owning.
Sir, in this case, both are holding 15%, 1515 then?
No, if both are holding 15%, then both are, let me just quickly cross check. In the meantime, if anyone has any query, you can type in the chat box. Okay. One second. Yeah. I believe if both will own 15%, you need to see, these are called attribution rules as well. Now, these rules, you cannot say like this. Husband is also, now, once you count the wife's share for the husband and you count the husband's share for the wife, we do not take it like this. If for one time you have counted it let's suppose you have counted 15% of the husband share to count it for the wife, you will count it for the wife only. In the hands of wife it will be clubbed. Now, another case, let's suppose you say husband is owning 15%, wife is owning 15%. Wife's share you have counted for the husband. Now, husband is deemed to own 30%. Now, husband will be deemed to be the substantial owner, substantial interest. Now, you cannot say it like this. Okay, you cannot endlessly count it. If you apply the attribution rules, see, this concept the law will not write, Arun Sagar. These concepts, how I am telling these, I am telling it from how the courts interpret it. How, if there is a problem in the law interpretation, you need to go to the court judgments and all. Now, in this case, you cannot endlessly count the percentages, right? If husband and wife both are owning, let's suppose you are counting the husband 15 plus 15, 30% deemed owner, then in that scenario, you will count it for the husband. You will not again count it for the wife 30%. So in this case, you will assume for one as substantial owner, and accordingly, you will apply the clubbing provisions.
Okay. Sir, there is an exemption for the irrevocable transaction. Means in case the transfer is done, means he is not going to get back until the life of the beneficiary, otherwise trustee. Sir, here beneficiary can be anyone otherwise except wife, son, and son, daughter-in-law.
Yeah, it beneficiary can be anyone because the idea is it actually a revocable transfer or irrevocable transfer? You see it. If you will go to the definition, it depends on I have transferred. Do I have the power? Let's suppose I want to give the income rights to my servants. Let's suppose now I do not have a relation with the servants, but I am transferring. Do I have the control on the property? The answer is yes. So it is a revocable transfer.
Okay.
Okay. Anyone else? Any other queries? Dhanlakshmi, Amar, Vijay, Nisha, Anchal, Maithili, Sanju. Yeah, Vijay, you can unmute. I hope, have you understood today's session, everyone? Any queries? Have you enjoyed the session? Final call, if you have any queries, you can ask, else we can wrap it up for the day. Okay, I'm waiting for last 30 seconds. Okay then. Thank you very much, everyone. Please do revise, do practice all the questions, and we'll meet on Saturday. Saturday's timing are 11 a.m. Right? Thank you very much. Thank you, team. You can close the session for now.
Recording stopped.